Hey everybody, this is Greg Gossett again from Gossett Trading and Mentoring Live, and today is Monday, October 7th, 2019, and we find ourselves again in the final hour of the trading day. So thank you all for coming. I appreciate you coming and spending your time, investing your time with me. I hope you're getting some kind of return. I hope it's helping your trading or how you view the markets. And I hope you had a great weekend. Hope you had a good time, was safe, had a good, and as I mention every day, I prefer to make my trades in the last hour of the market, and more specifically, as close as I can to the closing price of the day. During the day, you have the algorithms, you have the day traders that are moving the prices around, battling it out. At the end of the day, the big boys come in, the large financial institutions, market makers get active, and they start moving the price in the direction that they feel is the most valid price. And therefore, those are the prices as close as you can get them to the close of the market, in which, my opinion, I believe that they're the most valid prices, and therefore I generally make the majority of my buying and selling decisions based upon that. I just let the day traders and the algorithms battle it out during the day. I sit on the sidelines and I just wait till the end to make my decisions. So anyway, oh, Jesse's here. Hey buddy, what's going on? Good to see you. Great lesson we had last night. You did really well. Proud of you. Thanks for coming today. Kurt, hey my friend, how you doing? I have a lesson with Kurt tonight as well, so I'm looking forward to that. Kurt, that'll be our second lesson, and so I'm looking forward to that. Hope you're doing well, Kurt. Hope you guys are both doing well. So all right, well, it looks like everybody can hear me, which is a good start. Interesting day today. We were much higher earlier. We were green on the day across the board. We have gone negative across the board as well. So the Dow's down 53 points, only down 0.2%. NASDAQ's down 14, about 0.2, and the S&P is down 8 points, which is 0.27%. So anyway, it'd be interesting to see where we close today. You know, we've had this rally off the lows the last couple days, and you know, a lot of times when you're in that 30 RSI range, a lot of times you'll rally up to the 50, and that is where we're getting close to. So we're going to have to keep that in mind, that we've rallied under the 30 and then up to the 50, rejected the 50, which generally is not that great of a sign, but who knows? We can't make guesses and have our own opinions in trading. What we really need to do is we need to follow the price action and let the price action tell us what we need to do. Steve Burns is here. Hey buddy, what's going on? Good to see you, Steve. Always a pleasure to have you here. Always an honor. I'm always excited when you're here, and I know everyone else is, so thank you so much. Steve says, hi Greg, hope you and your doggos are doing good today. Yes, Katie was bossing me around all morning. She wanted kibbe, and then more kibbe, then she wanted out, then she wanted in. I said, hey, I have to do the podcast, and she said, I don't care. So luckily, right before the podcast, she said she wanted to go out, and so I have her out now. So you know how it is. At the end of the day, she usually gives a command, and I have to jump to it. So we'll see how it goes. So yeah, Kurt, I'm really looking forward tonight. We're going to be taking a look at V1s, V2s in detail. So anyway, all right. So the plan for today, everybody, as usual, first of all, we're going to go ahead and run the U.S. legal disclaimer. We're going to get that out of the way. We're going to come back. We're going to take a look at all my current positions. We're going to talk about when I bought them, why I bought them, and how I'm going to manage them to the upside or the downside going forward. After that, we're going to do a few minutes on trader psychology, as I mention each day. The biggest skill that you can develop and try to master in trading are your emotions. The technical aspects are important. For sure, you have to learn them, but most people don't give a lot of thought to the mental portion of trading, the psychological portion of trading. And in my experience, people can trade well for a while as long as it's going good. But then if they hit a road bump, they have some, losses that compound on each other, then all of a sudden a different part of your brain lights up. You want to get, you might want a revenge trade. You might want to increase your positions. You might have lost everything that you made for 10 days and you're like, I want that back now. I don't want to have to wait a long time to get it back. But just remember, if you start feeling that way, if you feel like, man, I need to make this back, that is a danger sign. And on the other side, if you're making a lot of money and you're like, man, I made a lot of money, I'm going to take this position, it's going well, I think I'm going to take more than I normally do, that is a warning sign. And you have to be able to identify that in yourself, that you're starting to feel that way, and you have to pull back. So, we always want to look at trading as one, this next trade is just the next trade out of the next 1,000 trades. I'm taking a long view approach on trading. And if I have a drawdown, so be it. I will get it back. Eventually, I need to stick with my plan. So we're going to do a little on trading psychology. We're going to come back. We're going to go through my watch list. We're going to go through each stock one by one. We're going to take a look at all the indicators, support and resistance levels. And as I mentioned, I look at each indicator as a potential group of buyers. So, if I have a potential setup that has 2 or 3 indicators lining up at the same time, in my opinion, that is very positive and much more likely you're going to have a positive trade, because I look at each indicator as potential groups of buyers. And if you want the stock to go up, you want to be in the company of other buyers. And therefore, if you have a combination or a confluence of signals that happen at the same time, I look at that as several groups of buyers coming in at the same time. So if you want something to go up, you want to be in the company of other buyers. The more buyers, the better. So that's what I'm going to be looking for. I'm going to be looking for some kind of combination of indicators lining up. We use RSI, we use MACD, we use moving averages, we use ATR channels, we look for V1, V2 entries. So that's what we'll be looking for. And if we find something at the end of the day, then I'll go ahead and I'll take a position in it. And if we don't find anything, then I won't. It's okay not to take a position every day. We did not take a position on Friday, other than our daily SPY trade, but we did not take any positions on Friday. And who knows, maybe we won't take any today. Maybe we will. It just depends how the market closes. And then after that, after the market closes, if anybody has any questions for me whatsoever, if I wasn't clear on something, don't be shy, type it in the chat. I'm happy to answer it for you. That's why I'm here. If you want me to take a look at any particular stocks, I'm happy to do that as well. And if you have just some general trading questions, off the subject, please let me know. I'm happy to answer those. All right, so that's the plan. So if you could hold tight, and I will be back in about 40 seconds after I run the U.S. legal disclaimer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, Marco. Hey, buddy. How you doing? Good to see you each day. Really pleasure to have you here. Thanks for coming by. And if you have any questions, sir, you just let me know, okay? So, all right, well, let's get to it. So, Amazon. I did buy Amazon back here on the 2nd of October. The reason that I bought it was because intraday, we did reject the third ATR channel, and then we closed back above it. In addition to that, this was the previous low. Intraday on the day that we bought it, we went below this previous low and closed back above it, which would make this a false breakout to the downside. When you have a low of a range and you break out to a new range but then come back up into the old range, that is considered a false breakout to the downside, and in addition, it happened at the third ATR channel. So I did go ahead and buy it here. Next day, it went way down intraday, which wasn't looking very good, but then we did rally back over. If I had not bought it here based upon the rejection of the third ATR channel and the false breakout to the downside, I would have also bought it here based upon same thing. Rejection of the third ATR channel, rejected the range, so it was a false breakout to the downside, also triggered a V1. So I did buy it here at 1714. Currently we're at 1735. It did move up nicely, it did move up the day after I bought it, moved up on Friday. Today it did move up, although well off of its highs. It did reject the 10 ATR channel, and it did reject the -1 ATR channel, which is not good. It did make a higher high today, however, even though it's lost it here. Have not hit any profit targets. My initial profit target is here at 1777, which is the 50 RSI for today. My secondary profit target is the downward sloping 50-day moving average. At this point, because it has extended away from my entry about 1 ATR, if I get a close tomorrow below today's close, that would be the reason for me to exit, get out of this position. If that happens, to the upside, I will continue to phase out until either we head up to the 50. If we reject that, I will lock in my profits there. If it holds above the 50 RSI, I will keep it until it does close below. If it closes above the 200-day moving average, I will then move my stop from a close under the 50 to a close under the 200. And then if we get to my ultimate profit target up here at 1795, I will be out of shares. So that is how I'm going to manage Amazon going forward. But anyway, so far pretty good trade, although it was up earlier today, but now it is down. So as long as this doesn't make a close below the previous day's low, I will continue to hold this, phase out to the upside, or if we get a close below the previous day's low, that will be my signal to exit the trade. Goldman Sachs. So I did buy Goldman Sachs back here on the 3rd of October. We washed out this 200-day moving average thoroughly, closed back over. I did buy it there, and we did get into the low RSIs as well, which is also good. We did close back over the 200. The reason I like these kind of trades, one, we washed out the 200. Two, we closed barely above the 200. So if I'm wrong, I have the potential of being wrong very, very small. If I'm right, I have a good reward possibility to the upside. The next day, fortunately, it did go our way. It created a V2. Here's day 1, day 2, day 3. Day 2 washes out day 1, day 3 closed above day 1, closed back up into the value zone. So if I didn't have the position, I also could have bought the position here, but fortunately, I was able to get it at a little bit better price. Now, this is concerning to me that today I did hit one profit target, by the way. Right here at 202.19. So that is good. Took a couple profit targets here and one today. I'm a little concerned about this today as we got right to the 100-day moving average and we got rejected. That also dovetails pretty nicely with the low of that big down day. So I am actually considering locking in profits on this today because we got right to the 100-day and could not get above it. I'll just have to see. If we close below the open, 100% I'll get out. If our close is above the open, I will consider keeping it. So I'm just going to have to watch this one. But this has been a nice trade so far in 2 days since we've bought it. It is up about 2%. So not bad. So I am considering taking this, especially if we close below the open, and also probably the other determining factor is if we close below the 5-day EMA. So you can see we went above, basically got pegged, the 100-day moving average got rejected, and right now we are below the 5 EMA. So this is really kind of a discretionary kind of experience type of exit here. but I'm basing it just on experience. I don't like that we rejected this 100-day above us, and as well as the low of this big down bar day. So anyway, I'll just have to see, but regardless, this has been a good trade. All right, so the SPY trade, in case we have some new viewers today, I do buy the SPY every day at the end of the day, and I sell it first thing in the morning every day, regardless of technicals. You might ask, why would you do this? This is based upon a long-term back study from Liz Ann Saunders at Bespoke Invest on Twitter. But with this approach, you have two options. Option number one is you could buy the SPY every day at the open and sell it every day at the close, every day since 1993. Buy at the open, sell the close. Buy at the open, sell the close. If you would have used this approach since 1993, you would have actually returned a negative 13.9%. However, if you did the opposite and you bought the SPY at the close each day, sold it the next morning at the open, buy at the close, sell at the open, buy at the close, sell at the open. Using this approach, which is the approach I use, you'd have actually returned 634.2%. So you can see there's a huge difference between buying in the open, selling at the close, or buying at the close, selling at the open. Past performance is no guarantee of future results. That is true, and that goes for any trading approach. I really like this chart. I really like to show this chart every day because it shows a trading approach. It shows a proven, back-tested trading approach that works over time, that lets the edge play out the longer that you use it. And you can see over time, this definitely was a good approach to use. But in the middle, there's bumps and bruises that you might get because there's normal pullbacks, rallies, pullbacks, So the key point here is that you always want to position size correctly so that when you can use a method for the long run and let that edge play out instead of just getting in. Imagine if you would have got in here and used a huge amount of your capital. Well, it had a 2-year drawdown. You'd have thought this is the worst trading approach ever and probably quit. Right? So as with all trades, we want to take the long view. We want to let the edge play out for us. Okay. So with that being said, I did buy the SPY here on Friday. I bought it at 294.35 at the end of the day. It opened up lower. This was a losing trade. It opened up lower here at 293.50. So, it's to be expected. Does not win all the time. During the month of May, I think I lost 80% of these trades, but I've been using it since February 26th, and it has been very, very profitable, even though I had a really bad May, right? So again, back to position size. You do not want to position size too heavily. If I would have position size very heavily in May, I probably would have stopped using this, just like the chart I showed you, right? So you want to let your edge play out. There are going to be ups and downs, and but in the long run, if you have an edge, just like with the casino, blackjack, roulette, anything, they have an edge. In the long run, they always win. In the short term, they have ups and downs as well, believe it or not. So yeah, I did buy it at 294.35, sold first thing this morning at 293.50. So this is just one of the just a normal loss to be expected, and I will be buying SPY again at the end of the day. Twitter. So I did buy Twitter back here on the 3rd of October. I did like the setup. The setup was we rejected the third ATR channel intraday, closed back above. We also rejected the 100-day moving average, closed back above. We also washed out the previous day's low and closed back above its close, which is a V1. Here's day one, day two. Day two washes out day one, closes above day one's close, in addition to rejecting the third ATR channel, rejecting the 100-day moving average, and the RSI being quite low intraday at the bottom of this move. So we did hit one profit target yesterday. We did hit one profit target again today. You can see my initial profit target here is 41.92. That is what the 50 RSI would be today. My secondary profit target is right here at 43.11. So as long as we keep moving up, I will continue to phase out. If we get up to the 50 RSI, close back below it, that will be a signal for me to entry. If we close back above it, If we close above it, I will continue to hold and keep phasing until I hit my profit target, and then I will be out of shares. To the downside, if we have a close below the previous day's low, that will also be a reason for me to lock in profits on the trade. Or if we had a huge V1, if we went up tomorrow, maybe hit a profit target and then closed all the way back down with a bearish V1, a reverse V1 to the downside, that would also be a possible indication that I would just want to go ahead and lock in profits. But anyway, it's moved up nicely since we bought it. In a couple days, it's up 1.89%. So I'm happy with that. UNH. So I did buy UNH back here on September 30th. You might be seeing a pattern here. Why did I buy it? Okay, we went below the third HER channel intraday, closed back above it at the end of the day. We also washed out the previous day's low, giving us a nice V1. Here's day one, day two. Day two washes out day one, closes above day one's close. Also, we went from under 30 RSI the previous day to over 30 RSI the day that I bought it. So I had 3 reasons to buy it. Moved up initially a little bit, kind of moved sideways, kind of moved down a little bit. Last 2 days, we hit 2 profit targets here. We hit 1 today. So it's going nicely. And like with the other trades, because this is a counter trend trade, we bought here in the low 30s. 226 is the 50 RSI. If today we actually went all the way up, rejected that 50 RSI, closed underneath, that would be a reason for me to get out of the trade. If it went up, closed above the 50 RSI, I would hold it. And if it closed back below, I would get out, or conversely, I would continue to phase out until I got up here to my ultimate profit target. So those are our trades. Having a good day. Have had a really great last 2 days, I can tell you that. So, and especially today because the market is down. So we've had some pretty good winners here. But the one I am going to watch is Goldman Sachs. It's concerning me a little bit because, like I said before, it rejected the 100-day moving average above it. Normally I would look for a rejection of the 50, but I also am looking at this 100-day because we had this huge big bar down here today. And, if it rejects the 100 and rejects the 5 EMA, I may consider taking that off the table. So we'll just have to see where it closes. Let's take a look here. Okay. So this is the part of the podcast where I like to do a few minutes on trader psychology. I like to look through Twitter. There's many Twitter channels out there that kind of specialize in good trading psychology words of wisdom. And I really do look for these. And if I find something that, I think is applicable for the show, I like to cut it out and talk about it. But this is some trading composure. This is one of my favorite, one of my favorite Twitter channels. He specializes in basically trading psychology words of wisdom, and he has such great posts. You can follow him at Trading Composure, TradingComposure, on Twitter. But I really would suggest that you do. He puts out great content, and it's something you should read and internalize every day. But he says, when placing a trade, it is not enough to make sure that the rewards are worth the risk. You also have to make sure that the probability of success is acceptable for the amount of risk and the reward potential, even if you can only approach it from a Bayesian perspective. And a Bayesian perspective is where, you allow more data to come in. You can be basically open-minded and change your perspective a little bit based upon, what more recent results have been. So when placing a trade, it is not enough to make sure that the rewards are worth the risk. You also have to make sure that the probability of success is acceptable for the amount of risk and reward potential. And so what he's saying here, we always talk about risk to reward. We have to have a good risk to reward. Well, I could say, okay, it's at 201.09 right now. I will buy it now. If it closes below 200, I will get out. So I'll risk $1.13, but my reward is way up here to 221. Is the risk to reward good? Yeah, 100% it's good, right? It's like 20 to 1. But is it realistic? Not really, right? It's not realistic. It would be an awesome risk to reward scenario, but it's not a very probable type of risk to reward. So you want to have setups like, okay, here's a good example on Goldman Sachs. I bought Goldman Sachs here. My risk was a close below the 200-day. My reward is the 50 RSI. So you can see the risk is very small compared to the reward, but is it probable that we could get up there? It is. I mean, we showed that we rejected the 200-day. We closed above it. We know we have the 200 beneath us. And is it possible if we bounce here that we can go to the 50? Absolutely. And Anthony, if you're listening, I mean, this is basically what we talked about when we were doing our scaling out from the 30s with our risk up, with our reward up to the 6 ATR channel. It's just not realistic, right? And this is exactly why I'm bringing this up, because we had this conversation. This is exactly why this trading composure post was relevant to what you and I were talking about. If we buy at the 30s, the possibility of, our risk to reward up the 6 ATR channels, not very likely. Therefore, we want to have a risk to reward that's more likely, which is exactly what we did. Close above the 200, out under the 200 is a good reasonable stop, showing that the 200 could not hold the support anymore. But if it holds, a bounce back up to the 50 is very likely. It happens all the time. So anyway, I hope that helps. But just again, to wrap it up, your risk to rewards have to be, outsized. You have to have at least 2-to-1 minimum, 3-to-1 reward for your risk. But you also have to take those trades in the context of technicals where it is likely that that's going to happen. It's not just a pipe dream, right? That, okay, I'll risk 1 point to make 100. Okay, yeah, it's a great risk to reward. It's 100-to-1, but it's not likely. So you have to kind of blend those two together and get setups that could possibly realistically work, but also have a good risk to reward. So I hope that helps. Hey Wayne, how you doing? Good to see you, sir. Always nice to see you. Thank you for coming back. If you have any questions today, please let me know. Murat says, hey everybody, I hope you all had a great weekend. Thanks, Murat. I did have a great weekend. I hope you did too. Hope you're doing well, my friend. Anthony, hello all. Thanks again, Greg, for the brush up. It made things clear. No problem, Anthony. Anthony's a student of mine, and we were done with his lessons, but he had some questions and he needed to brush up. And so, if you guys ever take lessons from me, once the lessons are done, doesn't mean it's done. I mean, if you need to brush up, if you're not clear on something, you just ring me up on Skype and we get it clear. So I hope we cleared it up. Hey Bing He, what's going on? Good to see you, my friend. Bing He's our friend from Singapore. Hope you're doing well over there. Thanks for getting up early. John, hey buddy, how you doing? John says, for later, BTI, SIG, TMV. Okay, sounds good. We will take a look at those for sure. And for some reason, if I act like I'm ending without, please remind me again, John. UNH had a bullish MACD histogram divergence. I thought to enter the trade, but I had not much success with reversal trades. I forced myself to do trend following trades only. That's okay. Bing He, it's fine. You can specialize in a trend trade. Absolutely no problem. I mean, I did go over this a little earlier, why we bought it. Yes, this is a counter trend trade, but everything lined up, right? We had an under 30, over 30, under the 30 ATR channel, over the 30 ATR channel, and the V1. So was our risk to reward good? Yeah, our risk to reward was really good. I mean, if we were wrong, we were probably wrong small. And if we're right, we're, right, maybe 2.5, 3 times to the upside. So, and today it does look like MACD line is trying to cross over, which, would I buy it here? No, I wouldn't buy it here. I bought it here for a reason. Would I buy it here? No, but I would keep it. And if the MACD line does cross over, that's just more confirmation. So, all right. How we doing on time? I'm going to look real quick, John, at your, oh, great. This is one of those charts, John, that I can't look at it. I can look at it, but the way my charts are set up now because of, yeah, let me look over. Unfortunately, I won't be able to show you, but I am looking at it on another chart that you cannot see. Did have a V2 today, which is good. RSI is 40.47, still under the 1 ATR channel. So basically, it had a V. Here's day one, day two, washed out day one, and now we are above day one's close. It did find back here. We are above that. No, we're not above that. We're not above that. But it did bounce off the third ATR channel on Friday. You know, it's okay. It's a 40 RSI right now. And it has the 1 ATR channel above it. I probably honestly would not take this trade based upon that. I think I would have to buy it a little lower. I really think I would have to buy this under the 30, back over the 30 and rejecting, and it didn't quite get there, as you can see. I think probably the lowest it got on the RSI was about 39. No, it was lower than that, maybe 35. But then we have this gap here also that hasn't been filled. I honestly, just my opinion, I'd probably stay away from it. Let's look at SIG. All right, SIG is another one of those charts, man. I'm sorry about this, guys. I have not had this problem in 20 years with Trade Navigator, but I am having it now on certain type of stocks. It's a big day today outside the 1 ATR channel. I mean, it's a big, huge move. I certainly could not buy it here at a 62 RSI. It's just too high. It's too high. We did break out over this previous high here, but it's just too high. I mean, here is a V2, day one, day two, day three, day two washes out day one, and day three closes above day one. I don't think I could have taken this trade because it came down into the value zone, but didn't have any sideways movement. But, you know, obviously it would have been a fantastic trade. It's up 10% today. But I certainly would not be buying it up here. Now it's up here. I would wait for a pullback into the value zone, move sideways, and look for a V1, V2. And the last one is TMV. And this is another one of those charts. So we do have a V2 today. You can't see it on this chart, but here's day one, day two, washes out day one. Currently right now we are above day one's close. It's a V2, it's a V2 entry close to the 1 ATR channel. The RSI is 40. I like this one better probably than any of the rest. You know, if I were to buy this today, I would use a stop below halfway of this washout bar, and I would target the 50 RSI. But that one is, that one to me looks better than the rest. So I hope that helps. I'm sorry, I wish I could have shown this to you on the regular charts. Probably would have made more sense, but I'm not able to do that on this right now. So okay, very few people, how's it going? Yeah, so this one we can see, you know, we have a MACD bullish crossover. We did have a V1 here. I would not buy this. What I would be waiting for, you know, we went under the value zone, the green lines, we went under, we're rallying back in. I'd like to see this rally for another day, maybe get up to the 20, have a couple days pullback, and then look for a higher low V1 trade. This looks like an excellent candidate for that. But just to buy it right here, right now, I don't think so, because the people that bought down here are going to be targeting up here. So your potential reward is not that great compared to your risk. But, you know, be patient with this one. like I said, if we get another day up and then we get a day pullback or a couple day pullback and then we get a nice V1, V2, you're much better off because the people that bought here are going to be looking to sell up here, right? If you're thinking about buying it today, that's probably exactly right. You're going to be buying right into their selling. All right, let's go through the list and see what is happening today. So Apple. Apple got pretty high today. How high did it get? It got 65.26 RSI. If I had Apple here, I would be careful. We're getting close to the third ATR channel. A lot of the times we get up here, you're going to find some problems and find no more buyers. We also see our high over here. See, now we're making a higher high. See the strength of the MACD bars to the upside. See the weakness to the MACD bars to the upside here. Even though we're higher than here, the MACD bars are lower than here, showing that we are running out of momentum. So that's what's called the double top with the bearish divergence. So if I was in Apple right now, I would be a little concerned because of this double top with the bearish divergence. Doesn't mean I want to short it. Where would I be interested in Apple? Well, now that we've made a higher high, I switch into return to value trade. So I would look for it to return back into value, somewhere between the green lines, move sideways, look for a V1, V2. Currently, right now, it's overvalue. So I want to wait till it comes back into value. Adobe is up today. This would have been a good trade back here on Thursday when you had this V1 rejection of the 250, close above the 200, back into the value zone. If you're wrong very small with the close under the 200 day. If you're right, you might be all the way up to the 50 RSI. Steve Burns had this trade, so congratulations, Steve. But why did he take this trade? Well, it closed under the 200, back over the 200, giving him a very good risk to reward ratio. If he's wrong small. If he's right, he has 2 or 3 times to the upside or 4 times to the upside compared to what he's risking. And that is what profitable trading is about. So congratulations on that trade, Steve. AMD. Well, buying down here on this deep dip was a good idea. You can see we were much higher earlier. We may have rejected the 50 RSI on this one earlier. Let's take a look. No, not quite, but it got pretty close. So nothing on AMD. What I'm looking for on AMD, now that we were below the channel, we're in the channel, I'm looking for a day pullback or a couple day pullback in a V1, V2 entry back into the value zone. I like buying higher lows the best, because when you buy lower lows, you have your finger on the trigger to want to get out. If you buy a higher low, then the people that bought that lower low sold when it failed. They're out of the equation and can allow it to move up easier. So nothing on AMD. Amazon is continuing to go down a little bit. So like I said, close below the previous day low. That would be my signal to get out of the trade, or if it continues up, I will phase out and see how it reacts around the 50. Boeing, the deep dip off the 200 would have worked well, but again, people that bought down here are looking to see if it's going to hold the 50 RSI. Currently it is. Most likely they'll hold, but if it loses the 50, I would imagine they would sell and you'd see some downward pressure. So going forward, type of trade on Boeing would be, if we could get a couple days down, then get a higher low V2. Caterpillar, really nothing here on Caterpillar. In order to get interested in Caterpillar, I'd have to come down below the third ATR channel, get a V1, V2 back above the third ATR channel. That would be an option, or a close under 30 back over 30. The Dow, same thing. We bought down here at these low areas. I didn't, but the market did. We rallied. Let's see where we got today. Where did we get today on? We got above 50, right? Now we've lost the 50 on the Dow. That's not a great indication for the market as general. People down here were waiting to see whether or not this could hold above 50 or not. Now it looks like, well, at least right this second, it's going to close below. So I certainly would not buy this. And it's not a great sign for the market. So Walt Disney's having a good day today. We did buy it here under the third, over the third, hit the 30. But then I found out I forgot I had some Disney puts, so I had to get out here for a small loss. But I'm still happy because my puts obviously have increased in value. But this is doing very well. If I was still in this trade, I would be looking for a 50 RSI, but nothing there. Etsy could possibly set up for a V2 tomorrow, a higher low V2. Day one, day two washes out, day two washes out day one. If tomorrow we close back above day one, that would be a higher low V2. That would be good, but nothing there today. How are we doing on time? 20 minutes. Okay, Ford. Nothing on Ford. Can't see anything on Ford. Facebook down slightly today. What I would be looking for on Facebook would be if we continue to move up, a rejection of the 50 RSI, then maybe a couple days pullback and look for a higher low V1 or V2, or conversely, close below the 200 back over, which would give us a higher low close under and back over the 200, which I also like. 5, people bought this deep dip here. Looks like it did reject the 50 already on Friday. So if I had bought here or here, I would have gotten out here. So nothing there. But as with most of the charts that we're looking at today, we're looking for a day or two pullback and then a resumption back upwards, looking for a V1, V2. Gold, I thought it was possible we might be getting into gold today with the 520 EMA cross, but right now the 5 is 140.114, the 20 is 144.50, so no trade on gold, although we are setting up for a nice V2 tomorrow. Here is day one. Day two washes out day one. Tomorrow, if we close above day one's close, it would be a higher low V2 in the value zone, and in addition, most likely we would have the 520 cross. Google, again, same pattern. People bought this deep dip. We've had a couple days rally. If I had bought Google for whatever reason down in this range, if it would lose the 50 RSI today, which is very close, I would be getting out. So again, I'm looking for move back down, a day or a two, and then a higher low V1 or V2. Goldman Sachs, we have bought over the close over the slight close over the 200. Like I said, I don't like to reject the 100-day moving average. I don't like that we are under the 5-day moving average, the 5-day EMA. So I am considering just taking this off the table today. IBB, nothing there. I'm looking for a 520 EMA crossover. That's a good back-tested approach to trading IBB, but nothing today. Intel, like everything else, we had the big bounce and we stalled out around the 50. We're at a 52.51 RSI. So nothing on Intel today for me. In the future, looking for a pullback V1, V2. I know I sound like a broken record, but that's essentially what all the charts are doing. IWM, nothing here. What I'm really looking for on IWM, this is a really great back-tested approach trading IWM Russell 2000, is when the 10 SMA crosses under the 50 SMA, which it has, and then it crosses back over. That's a really good back-tested approach to trading IWM, and I'll show you very quickly the back test on this. So if we put in IWM, uh, 10, 50, simple day of cross. So using this approach, you can see that it has beat buy and hold. So it's better than buy and hold. And the drawdown is, 2/3 less than the drawdown of just buying and holding it. So this is a great back-tested crossover on IWM, is when the 10 crosses under the 50 SMA and then crosses back over. That is the signal. So right now, the 10 did cross back below the 50. I like where it's happening in the context of the chart. It's not overvalued. See, we did have the cross right here, but I didn't take it because it was way too overvalued. So, it was something I decided not to take. I want to see it in the value zone or lower. So this does look good going forward, but nothing yet today. Johnson & Johnson, closing above the 200, which is good. It's over a 60 RSI, so it's a little high for me. Coca-Cola, we were below the value zone, into the value zone. Like a lot of other things, I'm just looking for a higher low V1, V2 now, so nothing there. Lockheed Martin, looks like, buying the lows would have been a good idea. It looks like we did reject the 50-day moving, or the 50 RSI. So if I had bought it down here for whatever reason, I would be getting out of it today if it closed below the 50. MasterCard, nothing on MasterCard other than looking for a higher low V1, V2. And conversely, for a crossover trade, the 10 crossing over the 50 would also be an approach, but nothing there today. Altria is strong like a bull. I knew that vape stuff was like overhyped in the media. I've been telling everybody about it. So, could I buy here? No, I can't buy here. It's too high. It rejected the 1 ATR channel, but it is setting up for a nice higher low V1 or V2, meaning if we come down for a day, maybe another day, then we have a fake out bar to the downside and reversal back up. So that's what I would be looking for. Merck, we did make a higher high than this previous high, so then my mind switches to, okay, I'm looking for a pullback into value, move sideways, look for a V1 or a V2. Man, I sound like a broken record today, guys. Sorry, but this is the formation of everything. So MACD is positive. So yes, just looking for a dip, looking for a V1, V2 entry. I think that would be a good entry point. Microsoft down today. Again, people bought at these lower levels, looked good on Friday, but right now we're at a 49.39 RSI, so it looks like we're going to lose the 50 RSI. So if I did buy down here, it rejected the 50 and closed under, I would get out. Netflix, yeah, I was thinking about buying this because, see, we had this higher low V2. We make a low, come into the value zone. Here's day one. Day two washes out day one. We close above day one's close in the value zone. But the reason that I didn't buy it here was like a 42 RSI or something, and I didn't think the risk to reward made sense. So going forward with Netflix, I'd like to see this move up maybe another day, or even come down for a couple days, then look for another higher low V1, V2. That would really be the spot, especially being that we are under a positive MACD crossover. Nike, strong, just too high, near the 3rd ATR channel. Philip Morris, Friday closed above the 200-day. Now we're closing below. This is a close back above the 200, but it was too high here. It's up at the 3rd ATR channel, too extended. So on Philip Morris, I literally would need this to move back into the value zone, move sideways, look for a V1, V2. PayPal down today. What I'd really like to see on PayPal is I'd like to see it come down, close under the 250 and back over the 250. Closes under and then back over the 250, back tests very well long-term on PayPal. And it would also, if that happened, it would be a higher low, close under, close back over the 250, which is even better. So that's what I would be looking for. Conversely, possibly a break above the 200-day moving average. The Qs, again, got down here, low 30s, 3rd ATR channel. It's a good dip buy, and looks like at the moment we have rejected the 50 RSI. So going into the close of the market, especially on the indexes, whether we're above or below 50 is going to be telling. What do we have? 11 minutes. The SPY closing under the 50. That's also not good. I am going to buy this, however, with the overnight trade. TLT, been strong down today. We've made a new high. I'm looking for this to come back into the value zone, move sideways, look for a return to value trade, V1, V2. Tesla, nothing on Tesla. Twitter, of course, we have hit one profit target. We're running into that downward sloping 1 ATR channel, which isn't great, but I'm definitely going to hold this still because we made a higher high. And that was about the only issue really here is the one ATR channel above. So going forward, if we have a big move up and a huge reversal tomorrow, that would be a signal to get out, and conversely a close below the previous day's low, or possibly even a close below the 5-day, I would get out. But so far so good. We've hit a couple profit targets on that. UNH doing strong. If we could have another day up, we might test the 50 RSI. If we do and we reject it, I would get out, but this has been a nice trade so far, so we don't have to do anything with that. Oil down today, 38.98. I'd be looking for a close under the 30 back over. VIX. VIX had this nice move up. We got into an uptrend. Now we've come back down into the value zone. Now it looks like we're holding a little bit. So, this is a return to value trade on the VIX. So if we could get another couple days sideways movement and we get some kind of V1 or V2, I would go long the VIX. So the VIX went into a big uptrend, came down for a couple days, the market went up, but now we're starting to stabilize on the VIX, which is not that great of a sign for the market. Verizon, very, very strong. Certainly could not buy this. What I would be looking for is a day or two to the downside and look for a V1, V2. Walmart, again, come down, look for a higher low, V1, V2 that would be higher than this previous low. Energy, nothing there. Finance, if we could come under the 50-day moving average and then have a V1, V2 close back above the 50, yeah, then I would use that. There's a confluence of the 50 and the 100-day here. So I wouldn't be surprised if we have a couple days down. I mean, I don't know. I'm not going to base my trading upon that, but just looking out into the future, if we had a couple days sell-off and then a move back up, technically it would all be really good. Real estate, no. Utilities, no. Healthcare sector, I'd like to see healthcare close under the 200 and then back over. That would give me a higher low V2 back over the 200. So, all right. So it looks like the market is now selling off. We have about 8 minutes. Hey, Stephen Winters, how you doing? Thanks for coming by. Let me put those in. Let's hope that on these particular, oh boy. Let me look at this on my other chart. Unfortunately, there's certain symbols I cannot get on this chart today. So I have to look over here. I mean, it's up 5%. It's up 172. Way too high. I mean, it's very, very strong. Stefan, very, very strong. But could I buy it up here? No way. I can't. I mean, I don't buy over the third ATR channel. 90% of prices fail here. So would I be buying up here? Absolutely not. If I was in this, if I was really wanted to get into Ring Central, I would wait for a pullback into value. Buying up here, in my opinion, is like, people are buying it just because they think people are going to buy it higher. I don't know. It just could continue going up. But from a strictly risk to reward ratio, it doesn't make sense at these levels. POOD. Oh. Oh, PODD, sorry. Well, this isn't bad. I mean, you can see we moved up above value. Now we've come back down into the value, which is good. That's what I'm waiting for, Stephen, is to come back into value, move sideways. It is moving sideways, which this is good. So it made a higher high, came back down into the value zone. It's moving sideways. Now I need a V1 or V2. I need an attempted move down that immediately reverses. So this one definitely looks better than RNG. But again, we still need a move to the downside and reverse back up before I would get interested. Hey, Mount Doji, what's going on, buddy? Oh, Steven says I'm selling calls. Okay. There you go. There you go. That I think that would be more the location to sell calls at those high levels than to buy. So glad to hear that. All right, so we have 5 minutes. Yeah, much. I'm quite relieved, Stephen, to hear you say that because the thought of buying up at that level concerned me. But selling calls is bearish. So that's better. All right. So let's decide what we're going to do here. Amazon, it did make a higher high today. It didn't test that previous range. I think I'm going to keep this. Half position, we're under the 200-day. Goldman Sachs, full position. Like I said, I do not like that we rejected the 100-day moving average. I do not like that currently we went above and below the 5 EMA. And mainly the reason why I'm thinking this, guys, is because we look at the SPY. I don't like the SPY that we went from the 30 to the 50, rejected the, on a larger market perspective with the SPY. I don't like that. Looks like we're closing under 50. On the Qs, if you take the market as a whole, I don't like that. Well, I could be wrong. Now we're to 49.70. If it closes above 50, then that's going to be better. If it closes under 70, then I don't like it as much. So, but I think I'm going to take Goldman Sachs off. I think my final decision will be based upon what the Qs close at and what the S&P closes at. But again, us going above 50, closing below 50 as far as a general market, I do not like. So what do we have? We have 6 minutes. Twitter is fine. It's very strong. So I definitely am going to be buying the SPY at the end of the day with the overnight trade. UNH looks fine. I was looking at Schwab earlier. Look at that. We're at a 30. Oh, we're exactly at a 30 RSI, and that's where we're holding. So I'm not going to do anything with this, but just wanted to point that out at the 6 ATR channel, by the way. All right, so we're on autopilot as far as buying the SPY. Qs still under the 50. SPY definitely under the 50. So I did not see any entries for us today. I mean, we still have positions that's still positive, but we're right at an inflection point with the market right now to where we could be moving up. And if we do, I still have positions, but we certainly could be moving down here with the rejection of the 50, which makes me a little bit leery to add new positions. So I hope that makes sense. All right, so I'm going to queue up Goldman Sachs to sell and just lock in the profit on Goldman Sachs. And again, on Goldman Sachs, I'm very happy that I took some profits right near the top today. So what do we have? We have about a minute and a half. So yeah, I'm just going to go ahead and sell Goldman Sachs, lock that in.
Order partially filled.
And lock it in over here.
Order partially
257.
Filled. Order filled.
All right, so good Goldman Sachs. Thank you for that. Going forward, where do I possibly want to get into Goldman Sachs again? If we go back down, close under the 200 and back over. Conversely, if we get a 5 EMA crossing back over the 20 EMA, then I'll take a momentum trade to the upside based upon that crossover because that does backtest well. So currently we have Amazon, we have Twitter, and we have UNH. And then we'll have the overnight SPY trade here in about 30 seconds when we buy at the close. So let's see if the Qs can hold the 50 here in the last minute. I want to show you the last minute of trading. Oh, there's only 10 seconds left. But look at this big bar at the end of the day. Look at the volume at the end of the day. Look at this.
Order filled.
Boom. See how much volume
canceled.
came in the last 5-10 seconds of the day? those are the big
Order
boys and
cancelled.
all the market on end orders coming in. Most likely the highest volume day of the day. And everything closed off its low. Man,
Order cancelled.
good thing I got rid of Goldman Sachs when I did, because that last minute bar. So it's not real positive, right? It's not real positive. So we certainly sold off at the end of the day. The Q certainly closed under 50. The SPY certainly closed under 50. So listen, if you guys, I see your comments. I am going to respond to those. If you have any other questions, any other things to take a look at, please let me know. Please be so kind. Give me about 25 seconds. I have to go move Katie around before we get to the answer, but I will be right back. So hold tight. Don't go anywhere. I'll be back. Okay, Her Highness is taken care of. She says jump. I say how high. So, all right. Hey, listen, real quick before we get to answers, I do like to put in my daily plug each day. Hope it's okay. But I do want to let everybody know that I do offer private one-on-one coaching and mentoring and teaching lessons in the evening time via Skype. I love teaching. I've had really great success with my clients. What we do here on the live stream, I hope is helpful for you, but I can assure you that having one-on-one lessons, you are really going to have a better understanding, a greater depth of understanding of the markets if you work one-on-one with me, because we have, the immediate back and forth. I offer a course. It's 10 hours, 5 2-hour sessions, although the 2-hour sessions usually go 2.5 hours, sometimes 3, but there's no extra charge for that. It's very important to me that my clients do well, because it's a reflection upon my teaching. And of course, I want to have the reputation as having clients that succeed right after their lessons. So it's very important to me. I put a lot of work into it in my clients so that they know what's going on, so they have a good grasp of it. So, if it's of interest to you, generally, we just start with the free Skype call. There's no obligation, I promise you, but it's just a Skype call, 30 minutes, 40 minutes. I just want to get to know you better. Learn about your trading, see what challenges you've had, what kind of goals you have, and that I'll put together a lesson plan, that hopefully will help you achieve those goals and, learn to become a long-term trader. If you come to me and say, hey, I have 10 grand and I want to triple in a month, I'll just say, yeah, I just don't think I'm the right fit for you. But, if you're the right fit for me, I'm the right fit for you, then we'll do the 5 2-hour classes. And I think it's a good value. I think it's a good investment. I tried to price it reasonably. So if you're interested and you don't want to kind of have that get to know you call, see if we're a good fit, please reach out to me. My email is in the description of this video, and then you can also reach out to me on Twitter. If that's of interest, please let me know. And then if you like this podcast today, this live stream, whatever we want to call it, if you are learning something, if you think it's valuable, please do me a favor, hit the thumbs up button. It really does help promote the channel out to more people on YouTube. There's a lot of people that need help with their trading. I mean, there's a lot of people, trust me. And I think if they come to this channel each day, I think they'll start to learn some good trading principles. At the very least, I think they're going to lose much less money, but hopefully we'll help them get on the road to making money. So you can help me help them by hitting the thumbs up button. So, okay, there's my pitch. I have to do it every day, but it's exhausting. So I'm glad I'm done. All right. So Mount Doji, hey buddy, CZR. Well, doesn't look bad, Mount Doji. Mount Doji's getting good at these. Mount Doji is getting good at his analysis. I think Mount Doji was one of my first, very first listeners, regular listeners, and I'm impressed, buddy. But what do we have here? I'm going to be detailed about this. And Kurt and Jesse and Anthony, I think you will catch on to this. See how we closed under the 1 ATR channel? Once you close under the 1 ATR channel, in my mind, I treat that as downtrend. Then we rallied back up into the value zone. Then we came down. Ideally, we moved sideways. See how today we rejected Friday's low, closed above Friday's low. So this is a higher low V2 that also rejected the 50 EMA, also rejected the -1 ATR channel, had a beautiful V1, and on top of that, bullish engulfing candle. And we're only at a 53.65. Caesars Entertainment, usually I don't buy these low price stocks, 11.75, but I would consider this. We go down, we close below the 1 ATR channel, we rally back into the ATR channel, into the value zone. We're looking for a higher low V1, like I said, all day today. This is exactly what I'm looking for. People bought here, got a little high, they got out and moved back down, moved sideways. We're still in the value zone. We went down, we rejected yesterday's low, closed Friday's low, closed above Friday's low, giving us a valid V1, back up into the value zone, back above the moving averages, 53.65 RSI, so it's a good RSI reading. It's not overbought on high volume. Fantastic, Mount Doji. Fantastic. Really great analysis, really great setup. Now, this is the washout bar. If I was wrong, I'd probably stop out if we had a close below halfway of this bar. When you have these big bars, you usually have some support at the 50% of this bar from a Fibonacci standpoint. If we close below that, that's bad, right? If it's going to go up, it should not come back and close below this. So fantastic, Mount Doji. Really like the analysis that you did on here. And, Kurt and Jesse and Anthony, if I took this trade, as you guys know, my ultimate profit target would be up here at the 6th ATR channel for my phasing out. Although Kurt and Jesse, we haven't got to that. And then I would also have to be marking the 70 RSI as a potential area if it rejected. So that would be, whoa. Close enough. So if I would have taken this trade today, Anthony specifically, I would be using the 6 ATR channel because we're above the 50 to do my math on the phase outs, and I would be looking for some type of rejection of the 70 to possibly close out the whole trade. So hope that makes sense. Fantastic, Mount Doji. Dr. J, hey buddy, what's going on? Market needs some direction, hopefully up. Trumpy needs to do deal with China. That might help. That would certainly help. I don't think there's any doubt about that. Part of me thinks that the reason the market's holding up here or going up, obviously, is the possibility of a China deal. And then also, the Fed almost certainly going to be cutting rates again at the end of the week. But we shall see. But again, I have theories about the market. I'm sure everyone has theories about the market. But if you're a price action trader, you don't trade those theories. They're not predictions. You wait till the end of the day. You trade the price action. Bing He said, I took AEP today at the open as I missed out on Friday's close. No valid V1 or V2, but Friday's bar cut through a few moving averages. Also the nice uptrend and making a recent all-time high. Let's see if I have. So, okay. Bing He, look, I can see it moved up. I can see it moved into the value zone. We didn't really have a V1 or V2, like you said, and we didn't really have any sidewards movement, Bing He. We had one day of sidewards movement after the down day. We would have had to go down here. So yeah, I don't think I would have taken this trade. It was pretty high up into the channel. I mean, I can see taking it here, but I would be careful with this trade, Bing He, because to me, it's very possible that we could turn back around and have a lower high. So I mean, obviously, I hope it's going to go your way, my friend. But again, it's not a valid V1, V2 down here, and it did not move sideways. It's important that you move sideways. I think perfect V1 and V2 is very rare to appear for pullback. I find myself sometimes not following the rules. Okay, so that's a good point, Bing He. A perfect V1, V2 does not happen often. But you should wait for those to happen before you take them because they're high quality trades. If you know, when I first started learning V1s, V2s, I went through this exact thing. My teacher, I'd say, okay, here's a V1. He's like, it's not a good one. Here's a V1. Here's a V2. It's not a good one. It's not a good one. Because I told him, I said, I can find 4 or 5 V2s a day. He goes, then they're not quality, because you're not going to find quality V1s, 4 or 5 quality V1s every day. You might find 1 or 2 a week. So try to stick to the rules, Bing He. Honestly, I mean, I'm just, trying to give you the best feedback I can. Murat says, Greg, CZR, you showed your 70 RSI, but that changes every day, so you update it every day as well? Yes. Yeah. I have to change where the 70 RSI is every day, or the 50. Amazon, these were dip buys. So yes, this moves every day based upon the day's action. So on CZR, yeah. I mean, look, 1226 was tomorrow's 70. Today it would have been at, if it happened today, okay. Oh no, that was, sorry. Today's bar, if it happened, wish we could do that, right? So essentially, today's bar would be here, tomorrow's bar at 1226. So I would have to change around, my target. So today's 70s would be here at 1230. Tomorrow's will be at 1226. So yeah, I update it every day. Hey Dustin, how you doing? Hey Greg, I was checking out X. What do you think? Well, technically, see how we make a low, we rally into the value zone, we come back down. We did technically make a V2 today. Here is day 1, here is day 2. Day 2 did wash out day 1, but not by a lot. And today we closed above day 1's close. So technically it is a higher low V2. It's not a great one because the washout wasn't great. And it was into the value zone and closed under the value zone. So I don't like that either. So it's a subpar V, but it is a, just on the surface, it is a higher low V2, but it's not a great V2 because it didn't wash out Thursday's low. And even though it closed above Thursday's close, giving us a V2, I don't like that it rejected the -1 ATR channel. So, it's important, guys, to wait for a really good valid signal. 1, it increases your chances of being profitable, and 2, it gets you in the habit of being very precise. So would I take this here? No, I wouldn't, Dustin. What I'd like to see now, I'd like to see it try for another higher low V2, go up here, come back down a couple days, and then have a more valid higher low V1, V2 than this. I mean, this is higher than this, but it's not a good setup for the reasons I mentioned. But if we could get another higher low V1, V2 in the value zone, then I would take it. Hey, Bill, how you doing? You have been really helpful over the last few weeks. I have been much more consistent. I cannot commit to a class now. I would love to contribute to a Patreon account if available. Thanks again. Oh, wow. Thanks, Bill. I appreciate that. Yeah, I don't have a Patreon account. Listen, if you get in a position you want to take lessons, Bill, then we can do it. And in the meantime, I'm happy to help you here. And if you have any questions, you can always email them to me or send me a message on Twitter and help out. I understand everyone can't afford to take lessons. I totally get that. So I want to help you as much as I can here. But I don't have a Patreon account, and I don't think I would open one up. But I'm really glad to hear, Bill, that it's been helpful and that you're more consistent. And let's just continue to get more consistent, follow your rules, wait for good setups, get out when you're supposed to. But, if I can help you, Bill, you have any particular questions, of course, you can ask them here, or you can just send me an email. But thank you for the kind words, Bill. I appreciate that and the offer. Bing He says, thanks. Will force myself to stick to the rules. Yeah, that's what you have to do, Bing He, But the more you follow the rules, the more you'll get in a habit. It's like when I quit smoking, right? Now I'm in the habit of not smoking. If you would have asked me when I was smoking, could you quit? I'm like, impossible. But then I started and I got in the habit of not smoking. Now the thought of picking up a cigarette seems very strange, right? Doesn't seem right. So please stick to the rules. Kurt says, one-on-one with Greg, hands down the best decision I could have made. I'm shocked at how much I'm learning. He's an excellent teacher. Oh, thanks, Kurt. Appreciate that, my friend. Yeah, you've been a great student. I mean, you're a great student. Jesse's a great student. Anthony is a great student. And, you guys are all serious. And from a teacher's perspective, man, I love seeing that. I mean, you're taking really serious. You listen to everything I say. And I guess I should also say that with the one-on-ones, as Kurt and Anthony and Jesse know, I ask a lot of questions and I throw it right back at you. And then you have to do exactly what I do here, breaking down. And there's a lot of ums and a lot of pauses and a lot of thinking, right? But that's how you learn. You learn better by teaching. I get better at trading all the time because I'm teaching it to you guys every day. In the lessons, you guys have to teach it back to me, which means you're going to learn it better. But thank you so much, Kurt. I really appreciate that. I'm looking forward to our call tonight. Merritt says, once you bend the rules, you bend it all the time until it breaks. 100%, Merritt. I used to be a triathlete. I was a professional triathlete for about 4 years. And every day when I was out training, I was like, okay, I'll just lighten up a little here and maybe coast a little or not coast up the hill, but I'll take it a little bit easier, or I'll cut this workout a little short. And I knew that if I did that one time, it's going to be easier to do it the next time and the next time and the next time. And so I just never did it. And it's the same with trading, guys. There's satisfaction that you will take away in trading from following your rules, regardless of what happens. You can have the best trade that can go against you. You can have the worst trade that can go your way. You don't want to have bad trades that go your way because then you get in that mode as well. But, be particular. Look, if you only took one trade a week or 2 trades a week, nothing wrong with that. Honestly, probably the less you trade, the more money you'll make. So, anyway, I'm glad we had a good day today. It was green. Everything considered, it was green. So I'm happy for that for sure. I mean, we definitely came off of the highs. We were down almost 100 points. But, I'm glad. I'm glad for profit targets. I'm glad that we hit a profit target up here at Goldman Sachs before it reversed, although I did get out of that. Twitter. Did hit one right here at the high, and then UNH again hit one right here at the high. But if the market turns around tomorrow and goes down, then I'm glad that I phased out of some profit targets on the way up. I'm really glad. I mean, I'm pretty light right now. I mean, I'm really light. I mean, what do I have? I have Amazon, half position, have a regular position, a SPY. I have just over 50% of the Twitter position I had initially, and I have maybe 60% of the UNH that I had. So I'm very, very light now, but this is a good place in the context of the market to be light. This could be a pretty wild week, guys. We have all the Trump impeachment stuff, news coming out. We have the Fed announcement. I believe it's on, I guess I shouldn't say, I should know before I say. It's either Wednesday or Friday, I'm pretty sure. Mert says, I think it is not the satisfaction which helps the most. If you follow the rules, which is when it moves against you, emotional drawdown is much less. In the end, you follow the rules. For sure. And Merritt's 100% right, man. I mean, it's not just a capital drawdown, it's an emotional drawdown. You have, emotional energy, and if you're not following the rules, you're beating yourself up. If you don't follow the rules, and it takes away. I mean, it wears on you when you don't follow the rules. I'm telling you. And like Mert says, your emotional drawdown is much less. You have to preserve your actual money capital, and you have to preserve your emotional capital. That's why I always say don't get destabilized. Don't get too high, too low. Hey, Wayne, you bet. 3M. Oh, Dr. Jorgensen's favorite stock. I haven't looked at this in a long time. So back on Friday, we did have a V2. Here's day one. Day two thoroughly washes out day one. Day three does close above day one's close, which was good. We went under 30, back over 30. So this all looked good. I don't like that it rejected the third ATR channel above it. That's not so great. And as you can see, that really did act as resistance above. Now we're down beneath a 30 RSI, which is not so great. So, tomorrow, if we could close back above the third ATR channel and close back above the 30 RSI, and it was a V2, here's day one, today washed out Friday. If tomorrow we close up here, we would have a V2, day one, day two, day three. Day two washes out day one, day three closes above day one. If we close back over the third ATR channel, that would be ideal. And at the same time, we would go from under 30 back over 30, and it would all be higher low, which is great. So thanks for pointing that out, Wayne. I'm actually going to put that on my list and take a look at that, because I don't like this setup because we rejected the third ATR channel. However, if we can move back above the third ATR channel, now back above the 30 with the higher low V2, that would be outstanding. So thanks for bringing that to my attention, Wayne. I am definitely going to be watching that tomorrow. All right. You're welcome, Wayne. Final question time. Otherwise, I'm going to get out of here, go for a hike with the dog, come back, get some dinner, and get on Skype with Kurt. And there's going to be some hot V1, V2 talk tonight. Like I don't talk enough about V1s, V2s, right? I should have a little counter to see how many times I say V1 or V2 each day. All right. Well, listen, everybody, I appreciate you coming by. Wayne, thank you for coming by, sir. It's always good to see you. Thank you for the 3M chart. That could definitely be interesting. Merritt, thank you. Always nice to see you, my friend from Norway. Merritt always has really good comments, a variety of comments. He's broad-based, whether it's technical or psychological. Very good. Really appreciate those, Merritt. Kurt, thank you, sir, for coming, and we will see you tonight. Bing He, good to see you. Please, my friends, stick to your rules. Don't try to make a trade out of something that's not there. Bill Richardson, good seeing you, and thank you for that offer, but happy to help, and then maybe one day, when you're in a position, then we'll have a good class together. Dustin, good seeing you. Thank you for coming by. Dr. Jorgensen, good seeing you. Be careful out there on your motorbike. Mount Doji, good seeing you. Really good setup on Caesar. Stephen Winters, thank you for coming by, and hope you come back, and hope that held and selling calls. Please be careful with the calls though too, obviously, if they're naked calls. Very few people. I hope that helped, my friend, and it's nice seeing you, and hope you keep coming back. And John, sorry I couldn't look at your charts on the normal charts, but I tried to break them down on the other, so I hope that helps. Anthony, good speaking with you this morning, but I'm glad we got that cleared up. Marco, my friend, one day I know Marco's going to have a question. I know it, and I'm going to answer it for him. But thank you for coming back, for always coming by, Marco. It's nice to have you here and be one of the regulars. And Stephen Burns, always an honor, my friend. Really appreciate you coming by, and hope you, your family, and your doggos are doing well also. And then Jesse, really good talk last night. So, all right. Well, I think... Mert says, like Matrix, you see V1 and V2 instead of 0 and 1s. My gosh, that's true. I see V1s. I see V1s out in nature. So, all right, guys. Thank you for coming by. Have a good rest of your day. Go out and do something nice for somebody today. Just say hi. Open the door. Just something, right? Just something nice. We need more of that. So hopefully see you guys tomorrow, last hour of the day, and we'll talk to you later. Thanks again. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and Forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.